Hello traders and welcome to another video review. Today is Thursday, October 10th, 2024. Let's find out what's going on the Forex economic calendar for today. So how is the Asian session? Not that bad. Nevertheless, let's just tick the high important data releases as well, and now we got everything we need. Basically, as Asian session was non-event. We got some data from the UK, RICS house price balance 11%, and building approvals from Australia decreased from 11 to minus 6.1%. German retail sales are scheduled for this at 8 o'clock. At 9 o'clock, we got the unemployment rate from Turkey. Then we got some data from the Bank of England and of course from England credit condition survey scheduled for this at 10:30, and then at 1:30 we got the ECB publication of the monetary policy meeting minutes. During the US session we got very important data releases in form of the CPI and initial jobless claims. Both of these data are scheduled for release at 2:30. And the CPI is expected to decrease from 2.5% to 2.3% and from 0.2 to 0.1%. Then we got the German Buba president Joachim Nagel to give a speech at 7 o'clock. At 8 o'clock we got the federal budget balance. At 10:30 we got the Fed's balance sheet, and then at 11:30 data from the New Zealand kicks in. Business PMI data are scheduled for release. The last reading was 45.6 points. So pretty non-event session, London session, and very busy, very attractive in data releases US session. So let's just dig into the charts. Let's start analyzing the markets. Let's see what's going on euro dollar. 30-minute charts of the euro dollar is showing us a new low which apparently was made at the minimum is 1.0934. So we got a new low as the deterioration in wave 4 extends even lower. So the next target in wave Y here is located here at the level of, let me just move my chart to the upside so you can see it. There you go. At the level of 1.0910, 1.095, 1.0895, and eventually 1.0874. Please notice the fact that we are starting to diverge from the momentum. Momentum is at the level of 26 points, which is higher than 20 points. Last time, during the last swing low was made, and so we got the swing low on the price, no new swing low on the momentum, so we are diverging. Right, so please keep an eye on the euro dollar here for the potential bounce. Why we are talking about this recent level here? Because it's a technical support from the July 2024 1.0872. This is the quite important level here. But if we take a look at the situation here, this is quite deep. This is quite deep movement to the downside. It looks like the recent cut by the Fed made all of the traders to sell the euro and buy the dollar, and this is what they are still doing. So this kind of a situation have a very nice backdrop in the fundamentals. If we switch to the US dollar index, because it's all about the US session today, isn't it? Then we have another movement to the upside. So it looks like the US dollar is being bought all across the board, despite the fact that we have again bearish divergence. This high is lower than this swing high, and the momentum is not that strong anymore. If we switch to, this is for our chart, of course, if we switch to daily, you can see that we are close yesterday on a daily time frame chart above 100 periods moving average, and there is still room to the upside here. So we might be looking for a test of the Fibonacci retracement level. So let me just find out the there you go. This is the basically this is the low. So 50% of the last wave down is 103.15. and the 61% of the last wave down is 103.85. So this is the situation with the retracement on the US dollar index. So it's either very close to complete this retracement, but it's look very impressive and very impulsive and dynamic, and then we will reverse, or if we break above the 61%, then of course the situation might get ugly for all of the US dollar bears, because the next technical resistance is very close, right? We got this one here, and we got, let's make the supply zone. There you go. We got this zone here, we got this zone here, sorry, levels here, maybe just one more, just to be more precise, maybe this. So that's a 103.85, 104.08. This is the zone which is just directly above the 61% Fibonacci retracement. So that's the key zone right now on the chart, on daily time frame chart. Remember, where is my marker? There you go. Arrow mark down will go here. This is the key level. This is the key level, key zone, supply zone, and the Fibonacci retracement. 50% is good as well to reverse lower, but this is much more stronger zone, because it has a resistance levels, horizontal resistance levels from the past that market reacted, as you can see, and then broke below. Right, so this is how it looks like right now on the US dollar index. Let's now take a look at the different market. Let's see what is gold doing actually. What is doing gold? And as you can see, the gold is moving slightly lower. You can see this is daily time frame chart. We got all of these levels marked already, and we got a breakout below the technical support. So now this was the very tight range. The market dropped below this range. Okay, so we can remove this one, but low at 2624 was violated. So now we got new local low 2604, and we are sitting basically on the top of this recent movement to the upside. So we almost hit this level here, which is the technical support, 2599. And if we won't move back above the 2622 level, then gold might go even lower. Of course, because the trend is so strong to the upside, it might be only some sort of the correction, right? So let's say since this low, if we measure all of the ranges, right? So we take the price range of the correction. So we got 4.58, another one, 4.58. If we take the price range, well, this will be smaller. Okay, so that will be the biggest one, I guess, because that's definitely smaller one. Yeah, we got 2.41, and if we get one more here, we can see straight on that it's 3%. So this correction is still lower than the biggest one, right? In price range, in time range, this is the fastest one, this is the longest one, right? This is the longest correction. It's even that long. It's not only, oh, let me just move it. It's not only the just a few bars. It's even more. So it's minus 3%, something like this, and it's still a part of this upside movement. So maybe we are just pulling back. It's not that definitely it's not definitely some sort of the big correction just yet on the gold market. Let's now find out the last market, which is Bitcoin, of course. And now what's happened on the Bitcoin? The Bitcoin failed to rally. It made a local high at 64,438 and then moved back towards this technical level here. Let me just reiterate this level. The low of the wedge is 59,821, and we are very close to this level again. But the market conditions are extremely oversold. So if bulls will make a pressure on bears and reverse to the upside, they have a quite chance to return higher. Still, this level here is a valid technical resistance and the supply zone, and of course we got the new one. Unfortunately, we need to add one more technical resistance to our chart, so all of the bears might not be that happy. Bulls might not be that happy. Where's my level? There you go. This is the level. Yeah, it's this area here is getting stronger basically, and we still have the trend line here. So it's just getting more difficult for bulls to rally right now on a Bitcoin basically, and they are just getting smashed down every time they try to move up. So this correction here is getting too complex and time consuming. If we consider this movement from the lows of the 52,631 towards 66,400, right? So this correction is looking right now quite complex and time consuming. So it's definitely a part, it's definitely not a part of this upside movement. It's a different cycle, possibly corrective cycle, and when it's completed, there is a chance for the bulls to rally back up again. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.